Jaime, thank you for coming out again. It seems like, I see you once a year.
So yeah, about April. Yeah.
And the reason for that is because property taxes, I guess appraisals, right? Do they call it appraisals or estimates?
Notice value.
Value of notices from Harris County, all the, I guess, counties around here. Harris. What counties do you work?
We're stationed out of Houston, so our primary counties are Harris County and the 4 counties surrounding us. But we've expanded to where we can service most of the metro counties, and so but the core of our service area is Harris County, Houston area. That's where we're based out of.
Right. So that would include Harris County, Fort Bend, Montgomery, Brazoria, Galveston
County.
What about Waller?
Waller, it's not too much, but yeah, we do have activity out there as well. We represent Waller as well.
Okay. So you have the resources or the means or the ability to actually go out through to all these counties?
Yes. So we had to buy into it. Before, our database was just MLS, a local database, but we expanded our MLS membership to be able to service more areas.
Right. So if anybody's wondering right now, is that we're actually talking about property tax protests related to your property, your home values, whether it's investment property or not. So, I think we were talking on before this, and I find it interesting was that there's actually a lot of news right now related to, I guess, your federal income tax. And then there's a proposal out there by the federal government where they want to tax the unrealized gain values of your stocks or stock options and stuff. And I think a lot of it actually came from, I guess, Elon Musk, the CEO of Twitter, where, his net worth is huge, right? But it's really not that liquid. I mean, he's liquid, but not liquid in relative to his net worth. And, everyone sees this big number of his net worth, but a lot of that's baked into, I guess, his stock options or, stuff that he hasn't realized in cash yet. And the government is seeking to, I guess, the proposal right now is for people who are making over $100 million per year, and they can tax the unrealized gain related to, we don't know which class of assets yet, right? So it's kind of strange. I mean, if you're talking about stocks, right? Stock has, you can look on the stock exchange and know exactly what the value of the stock is today. But what if, his most of his wealth was like baked into homes?
Right.
How would you go out and determine the fair value of your houses and then tax the fair value, the change in unrealized fair value or unrealized gain, and then make them pay that amount? And it's funny because then, they got, obviously, values go up and down. So potentially in some years, maybe very soon, is that there's some devaluation, and then they're supposed to get a tax credit. All sounds very, like I said, this is just a proposal, what's written out there. But what's strange is that, when I brought this up to like friends and kind of talking about this, how crazy this sounds, they're like, it'll never happen. It actually started off as someone's thought at one time, which was like far away from reality. And then I think Janet Yellen, she actually discussed it on an interview on TV. And, I sent this link to my friends and they're like, it's not going to happen. Like, this is just her thoughts. And now there's actually like a written proposal of how this would all work, which is crazy, right? Which is all kind of like, everything is like one step closer to reality. And now, my background is actually in CPA, so I never really did taxes, but just some tax work, mostly financial statement audits. But what's funny about all this is that for our home property values, we essentially do that already.
Yeah.
Right? Like,
the parallels there, I see it completely.
You see what I'm saying? It's kind of bizarre that, like, if I bought a house $100,000 10 years ago, and now for some reason you're valuing it at $200,000, I'm paying the additional incremental tax related to that increase in value. So in some ways, we are paying an unrealized gain.
Absolutely.
And from your perspective, right, it doesn't seem like it's stopping.
Yeah, and this conversation comes up often with my friends as well. Our shop is built in property tax, and we make a living in property tax. But I despise the system that we've created. Especially years like this where we see the valuations go up faster than people's income. It's wonder how long it's sustainable, this type of tax system that we've got built in. And it's exactly what you said, it's unrealized. And sometimes we come across it at the county where, we're coming across comparable sales that have been completely remodeled, and I call it potential market value of those properties. Our property is not. So, we can't tax it on the potential of what our property could be. So, it's unrealized, and we're getting taxed on the increase of whatever the district's computer generates for that year.
Right. So before we get into I guess the details of how all that works, right? And what's strange is that I'm getting older, and I guess things I never really paid attention to things, right? When people talk about politics, right? And the way I've always approached politics was that if it didn't really ever affect me, then I've always been indifferent. If you ask me for my opinion on something on taxes when I was in school, I don't know, and I don't care because it doesn't affect me, right? Strange is that as you get older, more and more things affect you, right? I don't know, and it's one of those things where I guess this is why as you get older, people become more motivated in politics and stuff. And not saying that I'm rather apolitical. It is what it is. I just think you're getting screwed, and you just kind of work with what you got, right? But I think that's why people become activists and stuff. But one of my biggest questions so far, right? And I haven't really done much research on it, right? But home values have gone up since the past? What? Give me a wild guess. What percentage in the last 3 years?
Oh, I would say the last 3 years, I would say probably 30%.
30%, and over the last 5-10 years, maybe 50%, right? What are they doing with all that extra money?
Right. Well, we know, this it's tied to something that's appreciating, and the problem with the government is the more we give it, the more it finds ways to spend it, right? So that's what's up.
Yeah, it's. I would imagine that they're intaking more revenue, property tax revenue, than they had projected, at least. I would imagine, right? There's no way that you can project, let me get an incremental 50% increase over the past 3 years or 5 years. Because they're always based on historical data, and we haven't had this kind of run, right? Increase in home values, up until recently. So what do they do with all this extra money?
In a savings account somewhere?
No, right? So I maybe I need to do some research, and like I said, this is kind of the part of me. I'm it's mind blowing to me that they have all this extra revenue, but it's almost like no one talks about hey, we got all this extra revenue, and we're doing this for the city or the neighborhood. The additional revenue that we received this year, this is what we're putting it towards. There's never any discussion. All citizens around here, and it's not just around here, it's a Texas law, right? We're all paying more, and there's a significant amount more revenue income, because anytime there's a drop, there's always discussion on when there's a drop or shortage or whatever. But we've had this amazing run of increased revenue. There's almost as if there's no talk of what this additional revenue is going towards at all. So I didn't know if you knew.
No, that would be interesting to see some numbers like revenue per capita, something that'd be some way to normalize it for 100,000 or something. But it'd be interesting to see. This obviously increased revenue is coming in from the valuation, their taxes being tied to it.
Yeah. So right now, I really just had to get that off, and that's one of my things that I'm God, this is crazy. Being an auditor, I didn't even know where this money's going. That's kind of besides the point. So kind of tying in federal government, we are paying an unrealized gains tax, so to speak, from our properties, and I own a bunch of rental properties, right? So why don't you tell us how it works between homestead properties and non-homestead properties or investment properties?
Yeah, absolutely. So just to rewind a little bit, I think by now everyone's somewhat familiar with the property tax system, but every year about this time, the county sends out a notice value, and that's what they intend to tax you on for that year. So that the county will send out, whether it's a homestead property or rental property, what they think is the market value of the property. They say it's worth, say, $200,000. If it's a homestead, one privilege that they have is they can only go up 10% from the final value the previous year, the final appraised value. So there's a limit to how much they can increase it. Even if they believe that the value of the property has gone up 30% from last year, they can only increase the taxable portion of it 10% from last year. Unfortunately, for rental properties, there's no limitation. If they believe that the value doubled from one year to the next, then they will give you a value of double the previous year, and there's no limit, so that they'll tax you on that. So that's the main difference, and it's something that protects homeowners, but it's something that exposes rental properties because it's not there for that.
Right. So, as we were saying that right now, we should be all getting in the mail from the Harris County Appraisal District or Fort Bend. It's based on your county, right? And if it's your homestead, right? So there's going to be two values on there. There's going to be the appraised value, right? And, quote unquote, right? So they actually call it the appraised value, and then they also give you another number, which is the market value, right? So if it's your market value, I would imagine will always be higher than your appraised value. Your market value is what they think it's worth, but the appraised value is what they're allowed to go up on you for your taxable in order to multiply by the tax rate. So what you're saying is that on the appraised value, they're only allowed to go up incrementally 10% per year. Quick little tangent here. I believe there was a law that was in play. I don't know if was that originally, if you bought a house, if you were occupying the house on January 1st, then you were allowed the homestead exemption, right? And I believe there's a law that like, hey, if you actually bought it like middle of the year, like March or something, you were still allowed the homestead exemption. Did that law go into effect or did it not pass?
Yeah, so last year there was a little relief that came in. So it used to be that you had to wait a year before, like you said, you had to file in the homestead exemption this year. You lived there on January 1st of that year. So you had to wait. Say you bought it in October, you had to wait a few months to turn in your homestead exemption. Now, the law passed last year, and this is actually the first year, we're just a few months into it, that as soon as you buy the property, you can apply your homestead exemption to that property. So it's something that's helping out. But what's interesting, it's if you bought a property that the previous owner had a homestead exemption on it, it stayed on for the year anyhow. So
right.
You had it that year. If you bought a rental property, that's where it's a little bit different. Now you get the homestead exemption that year as opposed to waiting for the next year.
Right. And I remember I had a transaction one year where we purposely waited until like January 2nd to close because the owners that were buying it, they were still going to live in their house, and it wasn't going to be a homestead for them on day one. So they waited until January 2nd to get the homestead exemption from the previous owner. But they were doing like an extensive remodel on this like large old house. So it was going to take a while, so they weren't moving right away. But that's good to know that no matter when you bought the house, you can still qualify for the homestead exemption. That's good. So now, since we're talking about homestead exemptions, and this is actually something that I don't even know and I want to know, is that what is the difference between what benefit do you get? I think it's a discount, right? What benefit do you get when a property qualifies as a homestead exemption?
Yeah, there's two huge benefits, and it's been alarming and a little bit disturbing how many calls I get requiring or requesting information about protesting. And then I go to their account and it's like, they've been in this property for 5 years and they've never turned in their homestead exemption. It's like, we need to rewind a little bit. So the discount equates to around 20%, depending on what jurisdiction you get. So you get about 20% off of the property tax bill for it being your exemption. For it being your homestead. So that's the main one. And then the second one is you get that 10% cap that we talked about. They can only go up 10% from the previous year. But it's written a little bit oddly. So that first year you don't get the 10%. It's the following year after. Your second year of it being your homestead property is when you qualify for that 10% cap increase. But
that's only if it was not a homestead exemption for the previous owner, right? Because you still get the cap even if the previous owners were homestead also.
No, it's worded really oddly, and it's coming up a lot this year because the values went up so much, and people want that 10% cap from it's for you. So the second year that you own the property, you qualify for that 10% cap. So it's a little bit different, and it's if you bought it in 21, then you qualify for the homestead exemption this year. 22, and 23 is when you qualify for that 10% cap. So the cap doesn't come into play this year for you. it's written oddly, and this is the first year I think that it's exposed how oddly it's written because folks aren't getting that cap this year.
Right. Okay, so kind of going back on it. So right now, you're getting notices in the mail from whichever county appraisal district that you're in, and you're probably really alarmed, right? Second question is, have tax rates changed? I think that there's always been this like, oh, we haven't raised tax rates, but you keep increasing our value. Right. So has tax rates increased at all?
So the other thing that's kind of odd about our system is that taxes, the final tax rate isn't finalized until midway through the year. So they still have that one. It fluctuates hundreds of percent a year. Doesn't change too much. Yeah, they haven't lowered it, and if they do, it hasn't been anything that's significant from one year to the next. Like I said, it just fluctuates within hundreds of a percent for your neighborhood typically.
I mean, for like increase in tax rates, I believe like I'm just guessing, like they can't just like willy nilly like, oh, we're gonna increase it. Like it has to be approved like beforehand, right? Like some kind of voting system or by the board or something like that.
Which hasn't been much to slow them down because if the valuation of the properties are going up, there's really no reason to adjust the tax rate on it. So they're getting the increase on the front end, and the tax rate's staying about the same. But yeah, there's a process, and it has to be voted on. They can't just go in. They do have a certain win percent. I forget exactly how much they can without it being approved. But after that, there's a limit. They can't just increase it by a certain amount.
Right. So once you get your notice, there's an ability to protest. But before we get to the ability to protest, right? What do you say to those people who are like, I shouldn't protest. This is my value. This is awesome. It went up 100% or 50%. This is awesome. I shouldn't protest at all. What do you say to those people?
Yeah. And it comes up a lot more often than I would expect. But yeah, I guess there is something that feels good about seeing for a lot of folks, is one of their biggest investments go up so much in value. But we got to think it through. I tell folks, it's like you got to realize that your tax value and your market value are two different things. Like your tax value is always an outdated value. Like 2022's tax value is based on the 2021 market. So if you're wanting to sell your property, you're going to run comps for comparable sales for the last few months and determine your market value that way. So unless you enjoy paying more than your fair share in property taxes, I don't see a reason why you would want your tax value high. Your market value is a different thing. It's two different things, absolutely.
Right. I almost feel like, being a realtor, is that somehow people believe that their Harris County or whatever county appraisal value that they're provided affects their ability to sell. And that's not true, right?
If your realtor's ever using the county as their opinion of what you should sell the property, then there's some things you probably need to backstep a little bit on. You definitely want to run a fresh market analysis and see what's selling at what point, especially in years like this last couple of years where it's changing so quickly on us. It's two totally different things, and I think if we think it through, it makes sense.
So, in just kind of high level, right? How does the county determine the value or revalue your homes on? I mean, this is from my perspective. I mean, to revalue every single house in the county on an annual basis, that's a massive undertaking, right? So what do they take? What are they using as their points of valuation? And secondly, is that how accurate is it?
So, like you said, the Harris County, Texas as a whole, it's just too many properties and not enough appraisers. And I think a lot of folks also think that it was actually an appraisal, like somebody sat down and did an appraisal on the property. With this many, the district relies on computers with an algorithm type system where they come up with the price per square foot and multiply. And so there's errors, and also it could be that it doesn't even necessarily have to be an error. A $200,000 house may have a window where it could sell between $150,000 and $250,000, and maybe anything in there is potentially right. If the county noticed you at $250,000, then the hearing gets you down to $150,000, and that's a $3,000 swing in property taxes that you probably overpaid if you were on the high end. So, the district relies on, they have factors, and I call it an organized pantry where they have these factors on each of these properties. And I've come across properties that mistakenly had a remodel put on there for 10 years ago, and it's been sitting on there for the last 10 years. And it takes someone, hey, this is not accurate. You take this off, and it changes the factor in that logarithm. and algorithm. I mean, and then changes the valuation. But yeah, it's almost kind of the district doesn't like when I say this, but it's kind of almost like Zillow to me. You know, so it's a computer generated value that's spit out, and it's pretty good. But I think it needs to be challenged to determine if it's accurate or not.
Yeah, I mean that makes sense. Like I don't think there's enough people that they can employ, or otherwise, I guess our tax rates would go high enough to employ all these people.
Yes, it's a spinning.
To really value these things. So it is some kind of like computer generated based on some kind of average, or aggressive average, you could say. So right now you're getting letters in the mail for your notice, right? And I think years ago, I feel like it's been a long time where you had, they introduced the I settle.
Yeah.
Okay, so you could actually protest on your own, right? And I think you got to provide some document support for your the value that I think it should be worth, and then they could say yay or nay, or they can come back with a counter on what they think it really is, right? I think before I had some success with that, and then I think more recently no, and I really just don't do it anymore, honestly. But my next question is, even though you don't agree with their value, you can still go to the protest hearing, right? Okay.
Yeah, and previous years it would take the place. Typically, the system sets up 2 meetings for you: informal, where you can sit down and talk to an appraiser, and if you didn't come to an agreement with that, then it would go to the formal. And in certain years, that I settle option, and it's not something that we get to do as agents or that we utilize, but it's for the property owners. It used to skip the informal for the property agent, so I thought that was a big opportunity miss, because then you lose control and you go to the ARV, and it's a different game in there. But yeah, it's an interesting option, and I've reviewed hundreds of these I settle offers, and sometimes it's I've come across some that are fairly decent. I've come across others that there's no way you're leaving way too much money on the table. And so from a property owner's perspective, I think it's sometimes hard to evaluate whether the offer is fair or not, depending on what the case looks like.
Right. So do you have to do the I settle in order to protest, or you can just kind of like, I don't even want to deal with the I settle, I just want to go straight to the hearing?
Yeah, the I settle is something that they're pushing. It obviously helps the county a lot. It reduces their caseload. If they throw a number out and you settle it, then that's one less file that they have to work through.
Right.
So yeah, it's something you do not have to, by any means, take the I settle option as a property owner.
Okay. So for people who are trying to protest on their own, as I said, I did it back then, but I use you now. And I'll kind of detail my whole process that I went through. I actually went through the hearing and stuff. But so, do you recommend, for people who are doing it themselves, do you recommend just kind of trying the I settle and just see what you get from it?
So, what I don't recommend is not doing anything. I settle is kind of that one step up from not doing anything. And I recommend folks to get involved in the property tax system. Invites you to get involved. So just don't let it go unchallenged. I settle is better than nothing. And if you have a good understanding of what your case is, then it might be a good option for you. But it's tough to lean on it as it's going to be the most fair value offered to you, if that makes sense.
Right. So, and this is a long time ago since I've done this, right? So originally I did the I settle. I disagreed with the amount that they gave me. I know you had just mentioned that there was an informal hearing. I do not, for some reason, I don't remember the informal hearing, but I remember going to the formal hearing. It's for Harris County, so their office right off of 290, I think Hollister.
Right.
Is it Hollister? Okay, yeah, 290 Hollister, right? So what is the informal hearing like?
So
or is that one and the same? Is it the same moment or?
No, so sometimes they'll book it on the same day. Typically, it's 2 different days where you have an informal day and a formal day. And logistics have changed a lot over the last few years. So we're working through the pandemic, and I think we're getting used to doing business different ways. But it used to be on separate days, but now I think they're merging them. But so the informal hearing, the reason you might not remember it is that the I settle might have taken the option of your informal hearing. So because you took the I settle route, you didn't have the informal hearing, so it went straight to the formal. But was your question what the informal hearing is like, or?
So yeah, so I couldn't remember it. Maybe I did go into informal and it was like on the same day where how many people do you meet with?
Sure, just one. You meet with one appraiser. So
You're right. Now, okay, so now I remember. So I went to the informal hearing, right? So generally, this was before pre-pandemic. It was a long time ago. You go to the informal hearing, and then you sit at a cubicle with one person, it's one-on-one with another person, and then you present the values, and then I guess you give your value, what you think it is. They give theirs. If you can agree, great. If not, and then I think they take it to someone else. So once it's an agreed upon value, I think they take it to someone else, and then like if the supervisor, the reviewer, looks at it and they're like, "That's good," then you're fine.
Yeah, they have a certain amount that they can settle off the table, within their authority, and if you settle, to give you a settlement print, and that's your case is closed for that year, and you move on.
Right. So you do that in a cubicle one-on-one. I don't know what it is now. Is it Zoom or?
Yeah, so they're having some sort of Zoom option, which is it's interesting. The cameras aren't usually turned on, so I think it's just, I don't know. It's maybe I'm old school.
Like a phone call then. Huh?
Yeah, it's kind of like trying to negotiate through a drive-through window at Burger King or something. It just feels really odd, and maybe I'm old school. I feel like I enjoyed the full contact sport where you're sitting down and talking to somebody and working through an account. The same with the formal hearings. I like to be in the hearing with the appraisers, but yeah, it's another one of the things that it helps them be able to work from home and get through cases faster. But from a property owner, I think I don't know. I prefer the in-person meetings.
Right. So, and then if you cannot agree with the informal hearing on the value at the informal hearing, then you go what's called the ARB, which is the Appraisal Review Board, right? How many people consisted within the board?
3. Usually it's 3, and this is another one. The first year that they've opted for a one-person jury to hear your case, so we'll see how that plays out. I'm not real optimistic about that. I think we're gonna still go with the 3-person jury for our hearings. It's something that you have a choice to opt in or not. And again, it's another thing that just make it easier for them to get the accounts done. You have one person listening to your presentation, the district's presentation.
Right. So you go in this room. So when I this is kind of telling my story. I went into this conference room. You sat at a conference table. You got to have all your printouts, which is a significant amount of work, right? So you got to print all the data out. And then I presented all my information. And kind of before we get into that, so like, there's this one point where there's a person one time, they described me, I'm kind of like a match. Like, I go from like 0 to 100, like frustrated, mad, pretty quick. So I guess my point is, when I was sitting in this room, I spent a lot of time printing, stacks of paper, really showing them like, here's the comps, like here's pictures of my current house, what it looks like, right? Which they don't take into consideration. Like, I have a bunch of rental property. These rental properties aren't updated in the same fashion that this newly sold top of the market house was sold for. Like, I don't have all the features and the granite or, whatever, like nice stuff in there. So I was, showing them all this. And then I want to say that they kind of like huddled up and they came back and they're like, this is what we offer you. And, I was trying to keep my cool. I didn't want to go like full match. And my point is that I disagreed with what they said, and I spent a lot of time and effort. This takes a good amount of time out of your day to be able to go there. You got to pick a number. I think they call you, go in the room and stuff like that. So it's a process. Like, and if you have more than like one house, like I do, it's it can take a significant amount of time. So, anyways, I didn't agree with what they said, but that's like final, right? Like, so, you get a choice after that?
Yeah, there's 2 different options after that. You can go judicial appeal or arbitration. But yeah, it's you said the word offer, but it's just a ruling. So there's not even an explanation for their ruling. It's typically they just give a value and then that's it. The hearing's over. You don't even get a rebuttal or ask questions about it. Mm-hmm. So it is an odd feeling, and when you're not happy, it's the injustice of a bad ruling does burn, the stings, and so. But we do have 2 options after that. Unfortunately, the judicial appeal, typically the fixed cost associated with it don't make it something that's feasible or even makes sense. They might get $2,000 worth of tax savings, but it completely washed out in judicial fees. Arbitration is an interesting one. So depending on the value of the property or if it's your homestead, It's typically around $500 that you file an arbitration with the state against the ruling. The state will then assign, it can either be a CPA or a local lawyer or a real estate agent to hear your case against. And again, it's building the case again. So it's going to be more work building that case together. Depending on the arbitrator's ruling, whatever their ruling is closer to, whether it's the property owner or the district, the other party pays the $500 fee minus a $50 deposit. So they still keep $50. Even if you win the case, they're going to keep $50 out of your deposit that you paid, which even that bugs me a little bit for some reason. But I was like, if we went through all this administrative level that failed us, why are we still getting hit with the $50 fee? Let the county pay for that.
Right.
Then yeah.
Wait. You just mentioned, so you pay $500
deposit. You put a $500 deposit up, so you got some skin in the game, and whatever value the arbitrator comes up with, depending on whose value it's closer to their ruling. So say if it's 200,000, the county put it on. Property owner says it's 100,000. 150 becomes the cutoff number. So if they come in at 175, that's closer to the district. So the property owner would eat the whole $500 deposit. They wouldn't get a refund. Alternative would be if we won.
Oh, you're talking about this is onto the judicial or
arbitration. Yeah.
Arbitration. Okay, so this is beyond the ARB.
Right. So that's the option if you're unhappy.
So this part I'm completely unaware of.
Yeah. So there's one where you were asking if there was anything that we could do after that. There is one more step after that if you're unhappy with arbitration or with the ruling at the district. So there is an arbitration, and we have utilized it every year. We've utilized it, and usually we take the cases that we feel really strong with because there is a risk associated with those.
Yeah. So I guess my next question is, are there instances where like you get completely screwed where you go through all this to the ARB, right? Let's talk about the ARB, Appraisal Review Board, and then your value goes up than what was actually provided on the initial notice?
No, well, it's not that it's impossible. And there was one year back in, I think it was 2009 or something, where the county was doing it and the ARB was doing it, and I don't know what happened, but so we ended up filing arbitration on all these hearings, and then the other agencies in town did the same, and so the county was ended up having to go through all this paperwork just to put it back at the notice value, and I think they finally told them, like, it's not a good idea for it. The system wasn't meant to be punitive. If you go to the comptroller's page, it says that your biggest right as a property tax payer is to protest, right? So it was never meant to be punitive, but it's not. There's nothing in the code that prevents them from doing it, but I just haven't seen that over the thousands of cases. It's been over a decade since I've seen that it can happen, but it is possible.
That would, I mean, talking about infuriating someone, and you go through all this trouble, and you're like, oh, actually, your your value's even higher than we were wrong. Right. You're right, we were wrong. It's actually higher.
So it's almost now almost impossible, because what happens is the protest, if you filed it correctly, if you filed it on market and equity, even if you bought it for $1 million and all your neighbors are taxed at $100,000, you have to be like your neighbors at $100,000. So there's two things that protect you there. But again, it depends on how you file the protest. You need to make sure that you're filing on market and an equal appraisal.
And actually, okay, so here before, just wanted to backtrack, and it actually just occurred to me right now was that I was just on Facebook, and one of my friends on Facebook, he looked at his notice value, right? And somehow his land value went up 3 times, from like a small amount to a much bigger amount. And when you're protesting, you're only protesting the improvement, right? You're not protesting the land. The land value protest is not allowed. Am I correct on that?
No, you can challenge both of them. You can look at the land sales, and typically you'll see some agents pull it's a little tricky. Come up with your opinion based on improvements and your opinion based on the land, and you add those two numbers together. The same way they do it, we present it from the opposite side. But typically their land value is conservative, and then all of a sudden they bump it up, and so you need to double check when it does get bumped up, make sure it doesn't go above. But and it's some areas where they're tearing down properties, the houses, and putting a brand new building, you'll see the land value tables change more often because there's a demand for that land, and you definitely can challenge the land and the improvements as well.
Yeah. So actually, the house next to me, it was actually bought by a builder, and before January 1st, they made sure that they raised the old house for property tax
Mhm.
purposes. I guess for any builders out there, if you're trying to raise, I guess, a house, you got to do it before
January 1st.
January
Yeah,
1st, right?
Yeah, it's one of those technicalities, and I've come across clients that knock it out, mid-January, and it's like, but the house wasn't even there. And it's like, well, the way the tax code is written is we're challenging the value as of January 1st. So if the property was there, of course, it's an argument that even if it was torn down a couple of weeks, it didn't have any contribution value to us. So that's what we're arguing. That it's by no means is it. If you had done it a month earlier, then there's nothing to challenge. There's no house there. But the month
Right.
after that, it becomes more of a subjective type process.
Yeah, that's interesting. So it is possible to even challenge, even though you had a house for on a January 1st. So it is possible.
Yeah, you can challenge.
Okay.
It, absolutely.
Okay, I thought it was like too late, too bad,
Yeah.
or
You
something.
can challenge it. It's just if you tore it down, especially, that's the argument. Like, even though there was a house there, the value it was adding isn't much. So tear down value. Sometimes you'll see them put like a nominal value on it if the panel comes to the dot process that it didn't have value.
So when you tear down the house, what? Obviously, the county is not driving around and look, your house is gone. What do you just fill out a form and say that, like, hey, I tore down? I imagine there's a form on the county side that you have to fill out to say that, like, hey, the improvement is really no longer there.
I guess the companies that are tearing down, because a lot of these I see the permit pulled on it. So usually the county has their records of when a property has been torn down. But I have come across where they haven't, and it's been just mentioning to it. And typically they have a Google Earth type system that they can zoom in on any property parcel. And so with the January 1st date on it, if there's nothing there, then it's pretty easy argument to take that value off of it.
Yeah, I guess I didn't even think about that. When you're tearing down the house, you got to pull a permit to tear down the house.
I think it's the contractor that tears it down is usually the one. I have never followed all the way through it, but I have seen a permit on pretty much every house that I've come across that's been torn down.
Okay, so we're gonna get my next thing, and it actually applies directly to me. And I got this little notice, and I've just been, just kind of been lazy dealing with it. Was that I moved, right, and I didn't sell my old house, and so I think they sent me a notice that I got exemptions on 2 properties. Am I going to get penalized, or?
Yeah, so everything's written one way, right? So if the county finds out that you had a property that had a homestead exemption that you shouldn't have had, they can go back 5 years and charge you for the exemption benefits that came from having an exemption on that property. If you forgot to put your exemption on it, you can go back 2 years. So it's one of those things that it's not exactly even, but I don't know what databases they cross. I know if you change your driver's license, it's pretty good that they tap into that database and they're able to see that you're in 2 different properties. And so you definitely want to change that away or get that squared away, because there's just too much exposure for 5 years of exemption.
Yeah. Are they? I mean, are they like the IRS too, where if you don't pay, then it's the penalties and the interest will eventually be more than your taxes?
Yeah. So the tax assessor, and it's on a monthly. I think after 1 month is 3%, after 2 months is 5%, after 3 months is 7%. It's a scale that they have on there, so it's something that definitely can add up. And then at some point, I don't know what their decision is on value, but it's just something that they could ultimately foreclose on a property if there was something on there, that went too long.
Okay, so I guess I should take care of it. And I like I said, I imagine that it's just some kind of form that I have to fill out.
There's notice of removal. It's the easiest one to take off.
Okay.
Just so you know, we'll take care of it for you.
Just it's one of those things where they never come up. It doesn't come up until once a year, and then like you either take care of it or you don't, and then you get it again next year. Like oh crap! Like I probably should have taken care of this. So here's the next question, and I haven't explained this well to my friends and stuff, but you should protest every year, right? And the reason is because there is a cumulative effect if you don't.
Right.
Can you explain a little bit about that?
Like this is a perfect year for it. So the values went up astronomically this year. We're looking at, I think Harris County was 25%, Fort Bend was 30%. So I mean, it just went up a lot. So all the clients that we protested last year and we're successful, it gives them a lower baseline this year. So
Mhm.
their 10%, I'm talking about homesteads, their 10% cap is coming in lower than the new clients that are signing up. This year, all of a sudden, we're getting a ton of new clients that didn't protest last year, and now they see a high value. And we could have saved them if they would have protested last year, because that cap could have been there for them a little bit lower. But yeah, I mean, it's some years we knock off just a little bit and it's a win. Some years we knock off a lot and it's a win. But if you look at the 10-year difference in the cumulative effect, as you said, it's like it adds up every $200, $300, $500 a year over 10 years. It's a big difference from not protesting. And then there's years where it might be next year. It might be where they leave the value the same as the year before. So the hearing from last year ended up saving you for 2 years in a row, as opposed to having to start all over the second year. And so yeah, it's definitely a cumulative effect. That's probably the best way to explain the process.
Between all the different counties, I guess, which ones do you have like the biggest struggle with? Is it Harris County, or so obviously that's the one you do the most with?
I'm sure somebody at Fort Bend's going to catch it, but something's wrong with the culture down there at that county, and I'm sure I'm not making any friends. I feel like the property owners are having a hard time getting a fair shake down in Fort Bend County, and I can't say the same about Harris County. Harris County is they're aggressive with their values, but I think the process is as good as we can expect it to be compared to some of the other counties. And some of these counties we get into, some of the smaller counties, it's the whole game has been slanted to make it not property tax friendly, and I don't agree with it. So we have more arbitrations down in Fort Bend than we typically do in other counties. But yeah, I'm hoping it changes. That's a county that's growing really fast, so I hope the pressure of the population makes it something that they should work with the population more with.
Right. I think one of the funny, from my perspective, right, like the people who work in the county are people, or residents also.
Mm-hmm.
And you almost feel like, hey, you know where I'm coming from.
Right.
Like, hey, let's be a little bit more compassion, or have a little bit of empathy when I'm going through. Like, hey, when I bought my house, I bought it at this value. That's where I was comfortable paying my property taxes. Now you're literally almost, kind of like pushing me out a little bit by raising it so much. I find it odd. Like that, I definitely don't agree with the whole unrealized gain tax. Like, hey, what I bought my property is what I wanted to pay taxes at. You can change the rate almost. I feel like you're almost better off like, hey, change the rate on me if you think you need a little bit more tax revenue. But forcing me to constantly pay more taxes based on a higher value, in which that's not what I paid. Like it's complete. I don't know. Maybe my perspective on it is a little bit different, but I almost feel like even for investment properties or non-homestead properties, I feel like it should be there's a maximum. There should be a cap. Also, maybe it's like one of those issues where do we ever think that home values are going to go up 30%? In a span of 3 years. So like now we should be more motivated or progressive, I guess, in terms of like, hey, when we built this model where we're going to tax people with higher values for the value that we're given, there was never an expectation that values were going up 30%, 50% on an annual basis. Not annual, but like over a span of like short period of time. So I think the whole thing is just kind of, it might be broken.
Yeah. It's an uncomfortable conversation. I bring this up often. Texas doesn't have a state income tax, and so we pride ourselves on having a lower tax on that. But I think about this, like we see all these folks coming in from California, and their property tax system is way different. They buy the property, it stays in place for I don't know how long, but it's not as aggressive as ours. They pay taxes and several other things. And I wonder what happens when the break-even point is if our tax system is based on something that's appreciated in value. At what point is it taxes becomes closer related to another state? So like if our values are lower, then it's different. But yeah, it keeps appreciating. At some point, it's a break-even point. And, I wonder if this year, fast forward to any conversation and looking at different ways of tying our property tax system or our tax system in general in Texas.
Right, like I think they'll almost be tied to some kind of metric, like maybe inflation, which sky high, but not as much as our home values, because we're basically paying on a significant inflation amount. Right. We're complaining about 8% on goods, I guess you say. Now we're talking about 30% on houses,
Right.
which is huge, right? Affects everyone significantly. How did you, kind of give me your background? Like, how did you get into this business, and where did it come from? Why property tax protests?
Yeah, it's interesting. I get this one often. So all I've done is real estate. I've worked in real estate since I was interning in college at A&M. And early in my real estate career, I just wanted to learn everything. So I was taking every real estate course I could take, every inspector course, every insurance agent course, with no intention of doing anything besides real estate. And in one of my appraisal coursework classes, the instructor said something about property tax work. I knew nothing about it. And at that time, I sent my resume over to one of the bigger shops, and I helped them out, thinking it was just going to be a 3-month seasonal gig. But I think the injustice of the property tax system kept me motivated, and it came one. I thought I was going to do it for 1 year, and here I am 15 years later, just still doing it. Like I said, I think the same reason not liking the property tax system is what keeps me motivated defending the property owners in the property tax system.
Yeah.
But yeah, that's how I came across it. Something I thought I was going to be seasonal, and realized it was an underserved niche, and I've just been working at it ever since.
I hear you saying the word like injustice. Have you thought about, as I was saying earlier, was taking it beyond, I guess, just from protesting from an individual property basis, and be more like, motivated on a higher level?
Yeah, as I think about it, look at the politicians when they often run their campaign on property tax reform, but then you read what the reform is, and it's not necessarily reform. I feel that there's a lot of misunderstanding on the property tax system. Mm-hmm. Like you said, the tax rate is something that we could be talking about, as opposed to the front end value. Like we can lock this tax rate in. But yeah, it's that's I haven't I fight the property tax system in the system the way it's written currently. Like I can see where the disadvantage is for the property owners, but I haven't gotten involved in anything bigger than political.
Yeah, I think the other I guess they call it commissioners, right? Mm-hmm. Kind of the person who you pay your taxes to. I think it's Ann Harris right now for Harris County.
Tax assessor, I believe. So yeah, I forgot her name. Yeah, she's her picture's right there on the first page of the tax assessor. They got her.
And I think prior to Ann Harris was actually Paul Bencourt,
was up there for
and now I guess he left public office, and now he's got his own firm that protests property. I wonder it was more monetary motivated, or like, from your perspective, like, kind of like injustice in regards to maybe you just disagree with the tax system and he's trying to help the other way, obviously making money off it, providing some kind of value. But I just wonder, like, how he took that leap from being the face where everyone's paying property taxes to actually having his own firm that he's protesting property taxes too.
Yeah, absolutely. It's interesting that I actually got to work for Paul. The year that he opened up the shop, he called and asked if I would help with his residential department, and it was a small shop back then. I pretty much did his whole portfolio for him that first year. Mm-hmm. But yeah, this there's a lot of things that need to be changed, and I don't understand. They talk about if we shifted it to sales tax, then the revenue is just so much off this property tax that the sales tax. The last number I heard was 24% was what the sales tax would have to be to replace the revenue from the property tax system. So again, that's another option that's not feasible. Like, that's not going to work either. So I don't know what we do, but something needs to change, I believe. So.
Yeah, I mean, like I said, I think the best model from my perspective is, really just putting a cap on everything. Like I said, what the property tax people are expecting to pay is the day that they bought the property, not actually increase it 30-50%. But yeah, I don't know. I don't know what the answer is, but I will always wonder, like, has this been proposed? Like, again, as far as like, because these kind of decisions, I guess my other point is that it affects everyone. So like, whoever's coming up with these laws or rules, right, it actually personally affects them also, right? Like, it's a mutual benefit for everyone. So like, I don't know why they're a taxpayer also, and I would imagine they have a nice property. I know from like a Texas, I guess, Congress standpoint. I mean, I want to believe learning in like middle school or something, that they're like, a lot of them are like part-time, like that's not their main job. Right. So like, that this kind of stuff should affect them personally, right? They're not full-time politicians like up in the federal government. They're part-time. They got other jobs. This is kind of like their part-time making, rules and laws for Texas citizens, and which ultimately would affect them also. So I don't know why this hasn't been brought up more often and why it has been pushed more easily.
So, I mean, it might be that it's because Texas, we've always prided ourselves on being a stable real estate market, right? Like, we haven't seen this type of appreciation that we saw the last couple of years. In the last 15 years I've been doing property tax protests, we've had years of it up, but we haven't seen 30% before. We haven't seen 25%. This might be the year that makes us start thinking about maybe there's some things we need to change. And what I also worry about is I don't think a lot of folks are really going to feel it until next March when their escrow readjusts.
Right.
So the property tax right now is early. They're seeing these values, but nothing's really happened. Most people aren't paying attention. October, the tax bill comes out. January, the escrow company pays it. And then March next year, you have a shortage, and now your payment is $600 more than it was last year. So I think it's going to take a little while for this to play out. But maybe this is the increase that changes the public's perception of the system that we're leaning on.
Yeah, I mean, to your point, so what you're saying for people to understand is that, so the mortgage company calculates so if you actually escrow your property taxes and insurance along with your mortgage, then there's not an adjustment related to it until later on. So there's a lagging factor to it. And generally, if there's a shortfall in your escrow account, right? So I don't know, what is usually, do you know the buffer? Like, they usually have like 2 months extra or 3 months?
Yeah, when you're closing, I believe that depending on I think it varies from lender to lender, but yeah, you'll see, I've seen 2 months, I've seen up to 6 months before requiring buffer bid. And they have laws that they have to, how much they can have in escrow as well. But yeah, it'll create a shortage if the other thing is that insurance also is going up. So now you got double hit.
Yeah.
Your taxes and insurance are going up, so there might be a double shortage. I don't mean to laugh at it, but yeah, it's
No, I laugh at it. It's kind of interesting. All those points are exactly, and then generally, so when they make the payment for your property taxes, if there's shortage, you have to come with a difference, and then they also make an adjustment on your monthly. It's almost, the 10% increase for homestead properties, it almost kind of hides what the true increase would be, right? Because your mortgage can increase, but not by the amount that it would have been, right? Because there's a market value and then your appraisal value, right? So now you're only going up by the 10% max, right? But I laugh because I was actually just thinking that just recently, I don't know if people pay attention, but I think there was on 60 Minutes, there was talking about how rent increases have gone up so much. But it's so crazy that, there's a whole 60 minute segment about rent increase, but no one talks about the inputs that go into kind of like, do you understand in Texas, like, our values have gone up tremendously, and then obviously for investment properties or non-homestead properties, that like there's not even a cap on these things, and we're paying like a tremendous amount more money towards this, and then as a result we increase our rent. So if anything, it's always kind of government induced rental increases, if you want to call it, right? So they always, the stories that the big bad landlords have raised rents to where people can't afford. Like, no, the reason why we've raised rents is because our property taxes and insurance have continued to increase with no relief whatsoever.
Right. So property taxes go up 30%, rents go up 10%. Who's the bad guy after?
Right. But yeah, I mean, there's always this, the news is always driven by some kind of agenda based, like landlords are these rich bad guys that are just trying to, take every dime or something. I just find it all laughable. But it's laughable, but at the same time, though, it's not, because people actually believe it. And it personally affects, like, hey, we need to stop property taxes going up so much. So, my next question is, like, there's a lot of companies out there, plenty of protests. I mean, I believe, right, and you correct me if I'm wrong, protest companies such as yours and others within the city, they only make money when there's a savings created. How does that work?
Yeah, so and it's changed. I've noticed a lot of companies getting creative with their fee structures. We try to be as transparent as possible. We only charge a percentage of tax savings. We don't have a sign-up fee. We don't have a minimum fee. I've seen it become more popular, and I don't know if they're taking advantage of people not really understanding, but some folks are charging for the market reduction. So what we talked about earlier about we only charge if we get you tax savings. So that means we have to get the market value underneath the appraised value. So if there's a big gap there, we say we knock 50,000 off the market value, but it doesn't get into the tax savings, then we're not going to charge you. We didn't save anything. We're not trying to add to your tax liability. But some people have built into some shops have built into their fee structure that they will charge you even if it's not tax savings. So I don't know, but that's just not the way we operate.
Okay, so let's back up. Let me try to understand what you're saying. So for a homestead property, right? Let's just say the notice of value was an increase of 10,000, right? But let's just say the difference between, this is a homestead, right? There's a difference between the market value and the appraised value. So you actually only charge on the unrealized or the tax savings related to the appraised value, because if you had done it on the market value, it would be more, right? Because but that's not. But you just said that you only charge percentage and savings on the tax savings, not the actual market value, right?
Yeah, and another thing, you think it'd be more uniform across the county for some of your listeners that are outside of Harris County. Harris County calls it market value and appraised value. The other counties call it market value and assessed value. So they both start with an A. They're similar, but so if you're looking at the values in your homestead, this year you'll typically see two different values. But we only charge if we're able to get the market value into the tax savings portion of it. It's a percentage of the savings. We don't have a sign-up cost. We don't have a minimum. Some shops I see will have a minimum sign-up fee. If they didn't charge you, if they weren't able to save you anything, they still have a minimum fee associated with their service. So we're performance-based. I believe that was the question, right? You're asking
it's performance-based, and according to you, based on tax savings. So is there an easy identifier for homesteads and non-homesteads? For you to, because you're saying that it's based on the tax savings, which would differ based on whether or not it's a homestead versus a non-homestead. So are you able to identify the property, or is that something that we have to tell you that, like, hey, this is a homestead versus non-homestead?
No, I get it. Yeah, so when your notice value, you have two values. We see those two values every point throughout the hearing. So we know exactly what we're challenging against. We know if we get into the tax savings, and if the two numbers are the same, it's either a property that was just recently bought that doesn't have a homestead cap on it, so the values are the same, or it's a rental property. But yeah, we see it absolutely. It's something we see from beginning to end on the hearing. So.
Okay. And as far as the process goes, right? So we submit you this form or document for us to protest, for you to protest for us, right? And so do you do like I said, from my experience, like taking it all the way to the ARB, which is where I took it, was a very time-consuming process. So for all these properties, you take it to that extent?
Well, depends. If we're able to settle at the informal level, if we get to a value, we see the range and we know what our opinion is, what's a fair value. Sometimes property owners, they don't see what we see. Like sometimes it's a small reduction, but it was like a small reduction that we probably didn't deserve on that particular hearing, and it's a win. And sometimes it was a huge reduction, and it's like we feel like we still missed, another $50,000. We think we should go to arbitration with this. But yeah, it depends. We know where we feel good at signing off, where we feel it's a fair value for the property owner, and all we're doing is consistently trying to get to the lower range of comparable sales, and if there's not enough evidence to support an increase over the previous year, we feel adamant that it shouldn't be increased. That's kind of the stance that we take going in with these hearings.
Right. How much has things evolved over the past few years? As far as I would imagine that you use some kind of technology that kind of puts out those values for you to kind of determine it faster. I've actually seen online protest valuations where they'll spit out a value that you can use to print out and protest for you. Is that technology just kind of constantly evolving for you?
Yeah, so what we do is get a hold of the district. So like we talked about earlier, the district uses a lot of algorithms and factors on the age and the depreciation and so forth. So what we do is we merge the MLS cells into the database, and so we can identify the properties that are yielding a lower value based on the property tax system that the district is. So it helps us get to a common ground area with them. We're using this comp, and based on your adjustments, it helps us get to this number. So this is the value we're supporting. The things that we have to manually put in on the pictures and so forth, those are things. But number wise, we can go toe to toe with the district's algorithms by plugging in our own cells into the same algorithm and see who can help us out.
So, this is kind of funny, but, I try to play my part, you could say, in the process of not helping out the county. So, like I said, I bought a house and they send this document or a letter, postcard, I can't remember now. And they're trying to ask you, like, hey, how much did you pay for the house? Do you recommend filling this form out? Like I said, I try to play my part to not increase property taxes.
Yeah.
So I intentionally did not fill it out. But does that play a role in things at all? Or maybe, I could, lie a little bit and putting a lower value and then see how that comes out?
Yeah, probably not making many friends at the district by saying this, but yeah, I'm kind of the same way. Like, you're going to have to find it yourself. I'm not giving it to you. But here's the thing is Texas is a non-disclosure state, and if it's sold through the MLS, then they already have access to whatever that sales price was, like they have a database, but they still for some reason go through the motions and send out that postcard and see it. But I'm the same way. I don't send anything back and let them figure it out.
So next thing is, like I said, as you said, and I think people are probably gotten multiple postcards, letters and stuff regarding processing your values, is what makes you guys, what makes you and Save on House Taxes stand out relative, I guess, some of your peers or competitors?
Yeah. So there's another trend that's happened is we got a lot of out of town shops coming in. I see folks from Dallas sending their team, folks from Austin sending us. We pride ourselves, we're a Houston-based shop, and I think what makes us different is our experience. And none of our agents that are handling your file are going to have less than 15 years experience doing property tax work. So another trend that's gotten real popular is hiring some seasonal help through the season, and so you might have a rookie handling your file with the property. Even though the firm that's taking your case is established in town for a long time, the actual agent handling your file might be somebody that's just a seasonal help for that year. So I think the things that stand us out is that we're performance-based, and we only work on a contingencies of savings, and everybody on our staff is experienced. Like I said, we have more than 15 years experience doing this full time. And just check out our Google reviews. I think we're one of the we're not the largest shop in town, but we're one of the highest reviewed shops in town. So people that are with us have stayed with us for as long periods of time. So I think we do good work, and we pride ourselves on it. Yeah,
and I definitely agree. Like I said, I've used you guys for several years. Ever since my my experience at the ARB hearing, I was like, I'm never going to waste my time going through this process again. It's certainly a time-consuming process. If you try to take it upon your own, and that's not to say that you shouldn't try. That's really what you want to do. Again, to your point, is that the worst thing you could do is nothing.
Right.
Is not protest. So one way or the other, you should protest, whether that's through the ISO or having someone, a company like yours or some other one, protest for you. I think it just kind of helps everyone. Because I want to believe that they take into consideration the houses around you values also, right? So like, if you protest and then your neighbor doesn't, what your neighbor's value may affect you later down the road. And I think I saw that at the ARB hearing.
Yeah, we talked about that earlier. When you file your protest, you need to make sure it's on market and unequal appraisal, because your house is exactly the same as the neighbor's house, and they would.
Right. Real quick, you said unequal appraisal. That is the correct term. The legal term that they use is that unequal appraisal relative to the houses in your neighborhood.
Right. Yeah. So there's two values that you're challenging: market and unequal appraisal. And if someone went through the hearing and was able to get their value reduced, and it's exactly the same as you, then that becomes a comparable that you can use based on unequal appraisal, that you should be at this. The way the tax code is written is that it needs to be a sample of property. So typically the district uses 5 comparables that are in your neighborhood that are like yours, and that's how they support their unequal appraisal value. But if you're presenting, it's tough to win on just one comparable, but if you can find 5 comparables that help you based on unequal appraisal, and this is not the sales price, this is just what they're noticed at or what their value is on the tax roll, then present those on the unequal portion.
Right. So, it's almost like a team sport, right? So, not only should you do it, but you should really encourage, all the people around you to actually participate in, protesting the taxes also, because that does affect everyone as a community. I totally forgot that point, that like, hey, you should really get out there and protest your taxes.
Yeah, like I said earlier on the comptroller, you go to their website. It says your most important right as a taxpayer is to protest. So I think we're all the better Texan if we get involved in the system.
Say that again. Your most important right is what?
So this is straight off the comptroller's website. You go to the
Okay.
comptroller. Your most important right as what did I say? Your most important right as a taxpayer is the ability to protest, and that's coming off the comptroller's page.
Okay.
Most
Yeah.
important. It goes back to what, no taxation without representation. Like, it's something that I think we've founded ourselves in this country on. So it's
Right.
it's a big portion, man. Like, property taxes probably equates to about a month's salary for most homes, most households.
Oh, for sure. I think, we were talking about this before. There's always so much focus on your federal income taxes, right? And not enough focus on your local taxes, state and local taxes. Well, really not much state here, since it's all, I think, sales tax based. Could be wrong, but mostly sales tax based, and your local is kind of your property taxes. But, again, so much focus on the federal tax, but when you consider your property taxes, between your school district and the county, sometimes the mud is billed separately, right? Something to focus on also. I mean, it all plays in the same. And then, especially in Houston, I think almost every other city, the tolls are really considered a road tax, right? You can add up all these taxes. I mean, we pay massive amount of taxes, and what we're seeing earlier is that the government, they will take in as much money as they can, and then, it will never be enough. It will never be enough for the government. They will just continue taking, no matter what.
I hate to agree, but I have to agree with them.
Yeah. So, like I said, with all that said, it's like I've been feeling this urge, like, sometimes as things have affected me more and more, I drive more, live in a house, and now all these things are affecting me more, right? Just had this really strange urge to, like, really be more active out there, to really kind of be towards a good cause for everybody.
Right.
I don't know. Just come my thoughts on it.
Absolutely.
Yeah, spread awareness, and like now I really want to kind of go out and like do a campaign and just kind of spread awareness. Like, hey, everyone needs to protest the taxes. And as you said, what is the final day to protest taxes here?
So in Texas, it used to be the 31st, but they bumped it down to the 15th. So May 15th, or 30 days after your notice value. Like, we're waiting for Galveston County to send their notices. We still haven't received those, so I'm sure they'll get them out in time. But if say they get it out in April or end of May, they still have 30 days. But May 16th is the standard Texas, or May 15th is the standard Texas protest deadline. This year it falls on a Sunday, so it rolls over to May 16th. This year we're looking at May 16th as a deadline.
So you're saying originally the protest deadline was May 31st, and it got reduced by like 2 weeks.
Yeah, so
is there a reason for that?
There's another. I keep trying to spread awareness on that as well, because I think a lot of folks, for so many years, it was May 31st. I think you'll hear a lot of real estate professionals still say May 31st, and it's been a few years now that it's bumped down to May 15th. But I think as more people are getting involved in the process, or as Texas is growing in population, it's increasing the amount of hearings that have to be heard.
Right.
And so I think that's why they bumped it down a couple of weeks to give them more time to hear them.
So that deadline, the May 16th deadline, normally May 15th, but May 16th because the 15th falls on Sunday. Is that deadline for all counties or just Harris County or?
Yeah, it's a statewide, Texas, all counties in Texas.
Okay. So it's going to happen, right? So what remedies do you have if you miss the deadline?
There is one option, which they've made it tough to win, but if you miss the deadline, there's a late hearing, a correction type hearing, but you basically have to be able to prove that your value was overassessed by 25%. If it's your homestead, by 33% if it's a regular property. So they put this huge margin that you have to be able to increase, and it's an all or none type thing. So you go in there and say you reduce 20% off of it, it stays at the notice value. You have to get below for them to do a correction, and then But that's the only remedy you have after the late hearing.
Okay, so really not much options.
No.
Okay.
Get them in early, and like I said, there is one, but the margins are tough. And, we've done it. We've won it before where property was on the property tax card and wasn't supposed to be, or wasn't really there, and so we picked it up late and we were able to file a correction to get it removed. Or the property was purchased on the open market for significantly lower than what the district had it. So those cases where we had strong arguments, we've kind of won before, but they're difficult.
Do you, one of the other things is that if you buy like properties off market, right, and then you get appraisals, do those come into play if you have like an actual true appraisal?
Yeah, you would think they'd be the gold standard, but we do get some resistance on them, but we do present them off market transactions, properties that weren't bought on the MLS are not. They're not taken very fondly up at the district. And the way that the property tax code is written is that it needs to be an open market transaction. So if it's on the MLS, it's easy to show that it was an open market transaction. But off market makes it, we present it as our opinion still, whatever that sales price was, we still present it as our opinion. A fee appraisal behind that definitely is going to help, but it's going to be reviewed by everybody up there, so we still present it.
So you wouldn't suggest people just go out there and get some fee appraisals just to use that as a like I guess maybe as someone that has like a friend that's an appraiser and they're like, hey, just do a bunch of appraisals for me.
I know there's a standard of ethics with the appraisers. I don't know, but then it becomes also needed if you're paying for a fee appraisal and those are coming in what $500, $600. I'm not sure what the appraisals are coming in now. So you have to decide if the tax savings of it are worthwhile or not.
Absolutely. All right. Well, that's all the questions I had. I mean, do you have any, I guess, last recommendations, suggestions for people in terms of like reducing their property taxes for the greater good?
Yeah, greater good. Just to spread word. First thing, it's been alarming, like I said earlier, how many folks out there are missing their homestead exemption. So just take a quick glance and make sure that you have your homestead exemption on there. Either talk to your realtor, talk to anybody, call us, and we'll double check really quick. So that's going to be the first and foremost. If it's your homestead, make sure it's on there. Second is get involved. The state is asking you to be part of this protest process. So whether the districts might not like it because it's more work for them, but they're inviting you to be part of this process. So get involved and do it yourself, or have someone like ourselves do it for you. If you're doing it for yourself, just make sure you're looking at the right timeline. Remember, 22 market values based on 2021's comparable sales. So don't run comps from right now. Look at last year's sales before you go into the hearing and see if you can identify some sales that help you take a reduction.
Yeah. I was just thinking right here as you were talking was that you mentioned that Texas is a non-disclosure state. You always get those, like when you buy a new house or something, you get this like letter in the mail like, hey, do you want to get a copy of your deed or something? I'm like 100% sure those are scams, right? Or the reason for that is because they're like non-disclosure. We're a non-disclosure state.
Interesting. I haven't received one of those, but I can see a while back there was a company that was doing that for homestead exemptions. They would charge you to file the homestead exemptions, and I used to think that was kind of like it's a funny way to make money. Filing the homestead is free, but now I'm thinking back on it and saying, wow, so many people are missing their homestead. That maybe it is an option or something that was that needed some service.
Yeah.
And I haven't seen one of those where they send you your deed, but I think we can all log into the county clerk's office and get a copy of your deed.
You can. I mean, it is a process, right? You got to go to the county clerk. I think you have to go there. I don't think you can just request it without going there physically. The other, just drew a blank here. I don't know. I just drew a blank, but I was going to refer to something else for the deed. Oh, I want to believe that title companies, I'm taking a wild guess here, but I think more recently on a closing, I think they provided the homestead exemption form at the title company, and you actually did it there at the title company. Yeah. Could I be wrong?
I know. I've been thinking about this with this new law that came through, and I'm coming across properties missing it. It's like, it feels as though this would be a nice add-on service that the title company could take care of at closing, now that you can apply for it right when you close on the property. And again, This is new. This is January of this year. It went into effect. It passed last year, but as of January 1st, if you bought a property, get your homestead on it as soon as you buy it. So it should be something that can be taken care of by the title company.
I mean, and if people notice, like, these title companies don't usually do things for free, but like, I wouldn't mind for like $20 because they're always charge some kind of recording fees and stuff to I guess kind of take care of the recording with the county. I really, if I were to guess, I want to say at least one title company I sat in was that you filled out the Homestead Exemption form. Anyways, that's all I had. I think that was super informative, what we talked about. I think number one thing is do something in regards to your protest. And second of all, is to spread the word and encourage everyone, especially around you, because it does have an effect on your appraisal values. And then also appraisal values has no effect on, your house being valued at higher value doesn't help you in any way. It doesn't affect your ability to sell the property at a certain price either.
Absolutely.
So Jaime, again, wonderful to have you. I think that answered a lot of my questions because, like I said, I have my own issues right now. I need to correct my homestead exemptions I got on 2 properties right now. But I think it's super informative. And again, May 16th deadline, and you're with Save on House Taxes.
SaveOnHouseTaxes.com.